Welcome to Best Investments for Beginners. If you've ever wondered where to put your money, how to start building wealth, or what the safest pathways are when you're just getting started, you're in the right place. Today, we'll break down simple, proven, beginner-friendly investment strategies without complicated jargon, without overwhelm, and definitely without the hype. So sit back, relax, and let's take your first steps into the world of investing. Chapter 1. The Mindset of a Beginner Investor. Before choosing where to invest, you need to understand how to think as an investor. Investing isn't about being a genius or finding the next big thing. It's about being consistent and patient. The real power of investing comes from time. When you start early, even with small amounts, your money grows little by little and then faster over the years because of compound growth. This means investing allows your money to build on itself in ways simple saving cannot. The earlier you begin, the more time your money has to grow.
Chapter 2. Start with a strong foundation. Before you invest any money, you need stability. This means having an emergency fund, controlling or paying off high-interest debt, and understanding your monthly income and expenses. These steps may seem basic, but they protect you from making rushed or emotional money decisions later. A strong financial foundation gives you confidence and reduces stress as you begin your investment journey. Chapter 3. Index funds are the beginner's best friend. Index funds are one of the easiest and safest ways for beginners to invest. Instead of choosing individual companies and hoping they perform well, an index fund lets you invest in hundreds or even thousands of companies at once. This gives you instant diversification, low fees, and long-term growth that has historically been very reliable. For many beginners, investing in a simple fund like the S&P 500 Index is a great way to start building wealth without needing much experience.
Chapter 4. ETFs – Easy, Affordable, and Flexible. ETFs, or exchange-traded funds, are similar to index funds but can be bought and sold throughout the day like individual stocks. They are low-cost, easy to trade, and give you access to almost any type of market or industry. Whether you want to invest in clean energy, technology, or global markets, there is likely an ETF for it. This makes ETFs a flexible and beginner-friendly way to invest without added complexity. Chapter 5. High-Yield Savings and Bonds – Slow and Steady Options. Some investments are not meant to be exciting, but play an important role in keeping your money safe. High-yield savings accounts, government bonds, and bond ETFs offer stability and predictable earnings. They won't make you rich quickly, but they protect your money when the stock market becomes unpredictable. Think of these options as the calm, steady part of your financial plan that balances out riskier investments.
Chapter 6. Real Estate without buying a house. You don't need to buy a house or take on a mortgage to invest in real estate. REITs, or real estate investment trusts, allow you to invest in properties like malls, hospitals, apartments, and even data centers. This gives you the benefits of real estate, such as income and growth, without needing a large down payment or dealing with property management. For beginners, REIT ETFs are often the simplest way to access this market. Chapter 7. The Power of Automation. One of the most effective ways to grow your wealth is to automate your investments. Setting up automatic weekly or monthly contributions makes investing effortless and keeps you consistent. Over time, these small, regular investments add up and grow significantly. This method, called dollar-cost averaging, helps you buy investments at different prices over time and reduces the pressure of trying to pick the perfect moment to invest.
Chapter 8. Common Mistakes Beginners Make. New investors often fall into common traps, such as trying to time the market, chasing trendy stocks, investing money they can't afford to lose, or checking their portfolios constantly. Many also panic when the market drops. It's important to remember that markets move in cycles. Ups and downs are normal. The key is to stay invested long enough for the long-term growth to work in your favor, rather than reacting emotionally to short-term changes. Chapter 9. Your first simple portfolio. A great way for beginners to start investing is with a simple, balanced portfolio. One example is putting 70% of your money into a broad market index fund, or ETF, 20% into bond funds, or bond ETFs, and 10% into REITs, or other alternative ETFs. This mix gives you growth, stability, and diversification, without making things complicated. It's low cost, easy to manage, and suitable for most people who are just beginning their investing journey. Chapter 10. The journey begins. Investing is not something you rush. It's a long-term journey meant to build wealth steadily over time. The key is to start small, stay consistent, and trust the process. Whether you begin with $50 or $5,000, what truly matters is taking the first step. The sooner you begin, the more time your money has to grow. Your future self will be grateful that you started today.
Conclusion. Investing doesn't have to be complicated, overwhelming, or reserved for experts. By starting with the right mindset, building a strong financial foundation, and choosing simple, reliable investment options, anyone can begin growing their wealth. Tools like index funds, ETFs, bonds, and REITs make it easy to build a diversified portfolio without needing deep financial knowledge. Automating your investments helps you stay consistent, avoid emotional decisions, and benefit from long-term growth. While mistakes are part of the learning process, staying patient and focused on your long-term goals will keep you on the right track. The most important step is simply starting, no matter how small the amount. With time, discipline, and steady effort, investing becomes one of the most powerful ways to secure your financial future.